Hello and welcome to the Collective Shift channel. Matt here to share with you the week's worth of news in macroeconomics as well as the crypto industry. As always, I'll get started with the Australian economy, and consistent with many other areas around the world, right now a major, macroeconomic shift, or what's dominating the headlines and the investors' mindset right now is fears to do with the Omicron variant. Those fears are basically to do with just the unknowns that relate to it. So what do I mean by that? The unknowns can include how viral or how contagious the Omicron variant is, as well as if you do contract the variant, how severe are those health effects compared to the likes of the Delta variant. So to that end, we have really seen Omicron cases really continue to grow at a strong clip over the past week. And got here the World Health Organization Director General coming out on Monday and saying that the spread of Omicron is happening at a rate that has not previously been seen. So and also predicting that the peak wave is still weeks away. So you'll definitely be hearing a lot more about Omicron over the weeks to come, particularly if it is more severe than the likes of the Delta variant. The early signs at least point to that not being the case. So, some early studies here detecting that it is more contagious, but not as severe for those who do contract it. So there are a lot of caveats with that. There was a study, I think the first study came out today, but that it has not yet been peer reviewed just because of the time sensitivity of all this, with Omicron only being, found 4-6 weeks ago. And then also just some other caveats such as, the age of those who are contracting the virus. Omicron seems to be, a lot of younger people seem to be getting Omicron compared to other strains such as Delta, when that was really taking off. And then also vaccination rates are, a lot different these days compared to when Delta was taking off. So, why am I even kicking this week's update off with this? In my opinion, just purely looking through it through the investing lens, I know there's a lot of different lenses through which we can talk about Omicron, and I'm not going to get into that for the sake of this video because it's more to do, these reports are more to do with investing. But this is very significant because of this. We've seen just in the past 18-24 months just how much of an impact, the virality and contagious nature of the Delta variant in particular can have on economic growth globally, as well as, country-specific economic growth. And then that obviously has heaps of ramifications for unemployment rates and even inflation rates. So that's why it's, still the number one kind of variable, in my opinion, moving into 2022 for the sake of, for investors, that is. And just kind of reiterating the infectiousness of it, New South Wales today. So for our international listeners or viewers, that is Australia's most populous state. Today did record its a 3-month high in the daily case numbers of COVID-19 cases. So that was 1,360. So definitely seeing rates going up all around the world, really, or for the most part. And again, just another lens through which to see, how COVID-19 and the rate of it in a given economy can really affect consumers. In this case, this is more just updates, a more data-driven, I suppose, representation of that. With today, the Consumer Confidence Index coming out, the latest one. That's put together by Westpac every month, and that has fallen by one percentage point to 104 points. So a neutral number or recording is about 100, so still slightly optimistic. The consumers, at least those that were surveyed, they're still slightly optimistic, but again, that can really we really saw business sentiment and consumer sentiment, as I recorded about 6 weeks ago, as Australia's economy was really opening up. Business and consumer confidence was really, increasing at a really healthy clip. So to see it now like taking a drop is really just a reflection of, hey, the Omicron variant has a lot of unknown factors about it. Therefore, confidence in the economy is going to take a hit. So yeah, just another way you can kind of look at the interaction between COVID and the state of an economy. Speaking of another metric that, can be really, like, I guess, affected by the nature of COVID and how much it impacts the society, Chile has lifted their interest rates by a staggering 125 basis points. So that's 1.25%. And that happened on Tuesday. And that was the second straight month that they've lifted their interest rates by that much. So that's unheard of. Whenever you see that on a chart, looking back through history, that's always such radical increases in interest rates or decreases is always an anomaly. Like, it's always happening when there's just some really strange period or like some outlier happening in the economy, which is definitely what we're seeing in this age that we're living through. So why has Chile taken such a drastic measure again for the second straight month? It's again that it's trying to tame soaring inflation rates. So as I've covered for about 2 or 3 months now, the Central American countries were really the first in the world to start lifting interest rates in response to growing inflation and inflation starting to get, I guess, overheated. And then we did see Europe kind of respond after Central America, and then other countries more like Australia and the US, they haven't responded yet, but their language has definitely responded to, at least, hey, we're acknowledging that inflation is starting to grow like a lot higher than what we would historically really be comfortable with. So again, just looking at Chile as one of the first ones to respond, and a lot of neighboring Central American countries, you're still seeing policymakers having to lift interest rates in a continued battle with kind of calming down inflation. So their interest rate now is at 4%, whereas countries such as the UK and Australia are in between, like 0 and 1%. Basically, most developed nations are in that 0 to 1% kind of range. Speaking of the UK, they do have their central bank, the Bank of England, is meeting tomorrow, I believe, Australian time, or maybe in 48 hours or so, to decide what to do with their monetary policy. So currently it's a record low of 0.1%, and the consensus is that they will be lifting interest rates, or at least that was the case definitely like over a week ago. But in probably the past few days, there has been some doubts creeping in given the uncertainty to do with the Omicron variant. However, I think most people are still expecting them to lift rates off that incredibly low 0.1%. And that, of course, would be in response to the UK or England recording a 10-year high, or nearly 10-year high, of inflation of 4.2% in October. Similarly, the Central Bank of the US, the Federal Reserve, they're having their 2-day meeting at the time of recording, and in about 24 hours or so there will be an announcement of the outcome of that meeting to do with monetary policy. So as I've said in previous videos, this monetary policy there's many tools that you can utilize as a policy maker. The most well known, of course, is interest rates and increasing or decreasing the cash rate, which is often just means interest rate to simplify it. And then another tool they have is how much they can buy, purchase assets off of the secondary markets and things like that, which is basically quantitative easing, which many of you would have heard by now, and that has been what the Federal Reserve has been doing during this pandemic. So all the talk at the moment, and this is by far, like, in my opinion and in many people's opinion, the biggest news of the week, just because of how much anything to do with US monetary policy kind of dictates markets significantly these days, particularly stock markets and crypto asset markets as well. And also will just dictate, I guess, other countries you can guarantee will be looking to see what the Federal Reserve's response is to, I guess, the state of play in the US at the moment, because we have seen inflation rate in the US. I think it's now at its highest since about the 1980s of 6.8%. So again, is the Fed finally going to, I guess, respond to that in a more, I guess, in a stronger way than what they previously have? They've previously fobbed it off as just something that was transitory and something that would just kind of go up temporarily and come back down pretty quickly, just as a result of all of the disruptions caused by COVID-19. We did see significantly a couple of weeks ago, the Fed chair, Jerome Powell, he did say that the use of the word transitory is going to be retired now, which was basically the Fed conceding that, hey, we kind of got this wrong and inflation is going to be hanging around a lot longer than what we initially had thought. So with that, that's all words, I guess, is what I'm saying, though. That's all words. But I guess what investors are going to be watching big time in the next 24 hours is if the Fed is actually going to disclose and reveal plans of perhaps, stopping their quantitative easing sooner than what people are expecting. That's really what everyone's going to be looking out for. There's no one's expecting them to lift interest rates, this week. However, people are really going to be looking at, because they have, announced that they're going to be stopping their quantitative easing, which has really helped prop up stock markets over the past, 12, 18, 24 months and property prices. So the Fed is going to be stopping that. It's just the rate at which they're stopping that you'll see that often referred to as tapering. If they really ramp that up and taper quicker, that's really, in my opinion, going to spook markets, because it's just a sign that there isn't as much money kind of, coming in and helping propping up asset prices. So that's really what everyone is fearful of at the moment, and it's a big reason why there has been a sell-off in cryptocurrencies as well as stock prices in the past week, particularly the more risky stocks, such as those in the tech industry. So yeah, that's by far the biggest news that we'll be seeing this week. And as a crypto investor in particular, there's no hiding the fact that this will have a big effect, in my opinion, just in the short term. The outcome of this meeting will affect, I guess, the crypto asset market. Whilst this asset class is still pretty young and immature, it is still really tied to those really like higher risk stocks, such as tech stocks. And speaking of tech stocks, just to kind of underline just how hard they've been hit, or at least most of them, I did just want to bring up this really interesting stat that I saw earlier this week of just how disjointed the kind of performance of tech stocks has been this year. So since that massive crash that we had in the end of April, there's been 5 stocks have accounted for 51% of the S&P 500's returns, which is really just insane when you think about it. So Microsoft, Google, Apple, Nvidia, and Tesla have accounted for slightly more than half of the S&P's returns since April. And if you look at the other, occupants or the other stocks and companies in the S&P 500, some of those tech stocks, I think have really been like really badly beaten up. And I think a lot of, I guess, the everyday investor isn't kind of, it's kind of been masked and hidden behind the fact that, the NASDAQ, Dow Jones, S&P have all been, at record highs basically most of this year, to be honest. However, since April, you've seen a lot of tech stocks down, 50, 60, even 70%. So a lot of, investors there have lost a lot of money. However, it's a really interesting time that these 5 tech stocks have kind of done the opposite and have really helped prop up these indexes to all-time highs. So that's just something I did just want to point out to you, more so from the fact that, hey, things aren't as frothy as what they may seem once you actually dig into it a bit deeper. And you can actually draw similar conclusions if you look at the crypto asset markets as well. I think people keep fearing there's going to be like the bubble's going to pop and there's going to be like a deep bear market. But if you look at some of the crypto assets, that were really big last year, they're down like 60, 70, 80% from their all-time highs, particularly in the DeFi or decentralized finance sector. So I was looking earlier today, like Compound, their COMP token, Compound, one of the leading DeFi protocols in the world. That comp token, it has depreciated about almost 80% from all-time highs, which, many people think this market at the moment has been getting very frothy, but it's almost a sign of the crypto asset market maturing in a way, because you're seeing such like wide differences in sectors or verticals within the crypto asset market. So obviously gaming and metaverse related tokens have exploded, but during that time you've seen a heavy sell-off in basically every DeFi token or crypto asset. And yeah, it's almost in a similar sense. You can draw a comparison to the fact that you could replace Microsoft, Google, Apple, Nvidia, and Tesla. Those types of stocks, how they're kind of, clouding out a lot of the other really poorly performing stocks. You could really compare Microsoft, Google, Apple, Nvidia, and Tesla to the likes of Axie Infinity and Decentraland and, Olympus, like so many of those ones that have just gone on a tear. All the layer 1 protocols, that's not to mention Avalanche, Luna, or the Terra protocol, even Solana, Polkadot, BNB, all of those have just really helped prop up the overall value of the crypto asset market. However, you've seen, a lot of tokens and crypto assets just heavily down from all-time highs. So I did just want to point out that kind of interesting story I saw earlier this week. Moving on to the crypto asset news from the week. I'll start off locally here in Australia, and there was a report put together by EY or Ernst & Young to do with, I guess, the prospects of Australia's crypto industry, and I guess trends that are happening within the industry and forecasting how big the industry could get. And notably, there were some predictions, at least conclusions from the report. I'll just read here just not to get it wrong. EY is predicting that the crypto industry is already responsible for adding about 11,600 jobs to the Australian economy, and that number is predicted to swell to 37,800 by 2025, and then over 200,000, slightly over 200,000 Australian jobs in the crypto industry by the end of 2030. So yeah, that was a very notable report put together, and that was kind of to help out, I guess, the Australian government's efforts into, I guess, learning more about what is this industry, how big is it, and it will really help them, I suppose, do their research and due diligence when considering how to regulate this fast growing industry. So yeah, it's a very, very exciting time indeed. And I think next year in particular, 2022, will be an even bigger year for the Australian crypto industry as we move to particularly here, adopt these recommendations and really become a world leader in terms of setting the standard for crypto regulations, which is holding back a number of countries, including Australia at the moment, in terms of just harboring and fostering a local industry. And it'd be remiss of me not to just remind you or even share with you, if you weren't aware, that at Collective Shift we are in the process of hiring for 3 new roles. So if you did want to check it out, we've got job ads out at the moment for a senior product manager, IT operations specialist, and content marketing manager. So if you did want to apply for those or learn more about the role, head to collectiveshift.io/careers. Okay, more on the local scene. I will just finish off my Australian coverage with this news also from yesterday with crypto.com. So a crypto exchange. They also do a bunch of other stuff these days. But they are expanding to Australia next year, I believe, and they've chosen Melbourne to be their Australian headquarters. So they also announced in that press release that they will be collaborating with Victorian universities to increase crypto.com's technical development capabilities. So we know Victorian universities, there are a lot of pioneering blockchain course providers. RMIT is probably the one that springs to mind first with their they've received international recognition for, I guess, their blockchain development course. And then even the likes of Swinburne and Melbourne University and Monash have all got now, to varying degrees, their own blockchain centers and blockchain courses. So a really exciting time here in the state of Victoria for all things crypto. So yeah, I did just want to mention that too. Okay, we have another company here, a publicly listed company, adding Bitcoin to their balance sheet. So this happened in the US, so a US listed company here, which is Lemonade Incorporated, which I believe is works in the insurance space. They will be adding Bitcoin. I think it's $1 million worth of Bitcoin to their balance sheet. It's actually through an acquisition or a proposed acquisition. That is, just looking through the SEC filing here. I think they are proposing to acquire Metro Mile, which is some sort of auto insurance, some sort of business working in the auto insurance space. So this will definitely be making the headlines and just setting another example of a publicly listed company adding Bitcoin to their balance sheet as, I guess, a way to just diversify their cash holdings. And obviously that was really the scene there, or that trend was really set last year with Michael Saylor, the CEO of MicroStrategy, who actually in the past week added again to their Bitcoin position. So I think they hold now, I think it's over 120,000 Bitcoin. So you do the math on how much dollar denominated value that is, but it's definitely no small amount. All right, Ledger here. So many of you would be familiar with, a very leading wallet manufacturer, wallet solutions manufacturer in the crypto space. They made a host of announcements this week at their conference, which I did just quickly want to run through with you. They will be launching a crypto debit card, a new hardware wallet, as well as making upgrades to their Ledger Live, interface. And then also in that Ledger Live app or interface, they are going to be integrating with FTX, a really, I guess, prominent exchange in the crypto industry. And then also on top of that, Coinbase Wallet has announced that they will be adding support for Ledger. So that will be their Coinbase Wallet's very first hardware wallet integration. There's already one. Ledger already has a MetaMask integration, but Coinbase Wallet in recent weeks has been making some really big moves to really start to compete with MetaMask a lot more fiercely moving into 2022. But I did just want to mention this here. It was a 5-pronged announcement by Ledger, and it's really just a reminder, I suppose, just of how there's just continued week in, week out, continued infrastructure based improvements in the space, like the infrastructure that supports the crypto asset class. I think is underrated a lot of the time, with just how rapidly it's continuing to improve. There are, of course, a number of issues and continued aspects of these solutions that aren't ideal. I know MetaMask, and to be honest, any mobile wallets or any crypto wallet is still really hard for newcomers to figure out and to get their head around. That's still a problem. There are still a lot of areas and opportunities for this supporting infrastructure to improve, but I did just want to mention it here because just to reiterate that it is improving. And I think a lot of the time people don't take that into consideration when they're thinking about investing in this asset class. The fact that there's so much venture capital being just poured into these supporting companies is a really, really strong signal, in my opinion, that it's a really big reason why I'm so long-term bullish on the asset class, is because to see how big crypto has become with so many user problems and infrastructural holes to do with custody, wallet providers, even institutional offerings. All of those have been really lacking in recent years, and crypto has still gotten this big. So to think that there's just going to keep getting better is a massive reason, in my opinion, why I'm long-term bullish on the asset class. Speaking of these kind of, behind the scenes sort of companies, NYDIG is, I forgot what their acronym stands for, New York Digital, don't know what ING, I think Group is the last one. They are probably one of the most underrated, undervalued, behind the scenes sorts of companies in the Bitcoin and crypto space. And today they raised a staggering $1 billion in a funding round, which valued them at $7 billion. So, NYDIG they do basically all sorts of institutional offerings, such as custody is probably the one that they're most well known for. But yeah, really, I guess a Bitcoin first kind of organization. And they have so many plans now to use this money, probably going to do some acquisition of either other companies in the industry or maybe some outside of the industry. But yeah, they're definitely working a lot on these wallet integrations and a lot more plans too. If you did want to take a read through this, they have their own institutional grade Bitcoin platform, and they just continue to grow at a staggering pace, without too many people, I guess, really knowing who they are, which is, I guess, kind of speaks to who their target market is. But it's to see them raising capital this easily is a sign of just how much, I guess, demand there is for their product. Similarly, to a bit of a lesser extent, but still just quickly worth noting, Anchorage, which is a really fast-growing, I guess, infrastructure provider and custodian, is again, or custody is their kind of focus. They are really prominent in the DeFi space as well, or growing their presence in the DeFi space. But they raised a Series D funding round, and that was worth $350 million. So, yeah, just emphasizing here the amount of money pouring into the space, and just a reminder that these Sunday Fun Day posts are always, so jam-packed full of just earnings raises that happen throughout the week. Kinji, research analyst here at Collective Shift, does a great job of collecting them all and then putting them into this post, which, as I've said many times, is one of the posts that I lean on, and one of the sources of content I use for my own research, because then it's often a good signal if you can get in and research a project early after they've raised seed funding. It can often really reward you down the line as an investor, because you've typically done your research on this early project a lot earlier than the market. All right, probably the biggest news in terms of mainstream awareness for the week undoubtedly was Nike acquiring RTFKT Studios, which is an NFT collectible studio, or non-fungible tokens, if for those of you unaware. An NFT collectible studio is a very broad term, which I suppose is kind of necessary with the fact that with RTFKT Studios, just because of, I guess, how many different ventures and kind of products that they've already launched this year. But yeah, to see Nike, a globally renowned brand, taking the leap to acquire an NFT business. The amount was undisclosed, but to see them even putting their name behind this is like such a strong signal to the world and to their competitors that, hey, we're taking NFT seriously and we're really looking to solidify a long-term presence in the NFT space. I think Nike's really only got, I think, 2 other external brands as part of their, I guess, family, for lack of a better term. That's the Air Jordan brand and Converse. So to see them, to see now RTFKT Studios being the 3rd external company that's been brought in, to see RTFKT Studios sitting alongside Air Jordan as well as Converse, you can really just see how, you really get a sense for how massive this news really was. And I did cover RTFKT Studios a couple of weeks ago on this macro and crypto update, because this the announcement of, or the release of their Clone X NFT avatars was a really a huge NFT launch in November. And a lot of the floor price of those NFTs, once this announcement was made, I think, when I checked it before the announcement, I think these NFTs were about 0.7 ETH, and I think just before this recording, I checked again that are about 5.5 ETH. So, a real 5, 7x or so, 7, 8x, depending on when people got in, that is. But I know a lot of Collective Shift members I was speaking to, they were really happy with this news, with some of them being Clone X holders. So congrats to them who've really made some significant profits for getting in on their Clone X investment before these big brands come in to, I guess, recognize and acquire these really big or these really promising NFT studios. So that there was very significant. We've seen Adidas, I did just want to touch on quickly. Probably Nike's biggest rival. They've also been getting increasingly involved in the NFT space over the past well, over the past month in particular, but a bit before that. So seeing that continued, I guess, adoption by traditional companies. We've seen like Louis Vuitton and L'Oreal also getting involved with NFTs this year. Visa purchased a CryptoPunk as well a few months ago. So they're just some examples of companies that are, really taking their involvement in the NFT space to the next level. And I'd expect there to be so many more moving into 2022. Speaking of NFTs, the Golden State Warriors, the really successful and well-known NBA team, they have partnered up with FTX with FTX now becoming the official cryptocurrency platform and NFT marketplace across all the Golden State Warriors properties. So again, just FTX teaming up with so many prominent sporting organizations all around the world and esports organizations as well. It's another week, another announcement basically. But seeing, I think Stephen Curry, Golden State's best player, most well-known player, he signed up as an FTX ambassador, I think a few months ago now. And he's had an NFT as his Twitter profile picture for several months now of the Bored Ape NFT. More mainstream adoption here with Pepsi, a soft drink manufacturer, of course, as everyone would know. They announced that they are releasing their NFTs, and that launched, I think, just about within the last 24 hours, an NFT collection. So again, them getting involved with the NFT industry. I think that was known that they were going to launch something. I think I said on this podcast about 2 months or a month ago, after that big NFT week in New York, that was I guess leaked, or I guess disclosed that they were going to be stepping into the NFT space in a more deliberate way. And so that's, I guess, the end. I guess that's their first step. We'll see what their involvement is after this, because I doubt it's just going to stop at releasing an NFT collection and that's it. I would expect there to be a deeper involvement by these traditional companies. And speaking of, non-crypto companies and kind of crossing over into the crypto industry, we saw here Twitch, so a really popular game streaming company. Their co-founder has co-founded another business, this one being an NFT marketplace, so that's called Fractal, Fractal. I really just included this here. Again, it's just more validation that NFTs are here to stay, or at least there's been so much attention of the put into the promise of NFTs, and the value proposition has been recognized that it's attracting just some insane talent from, I guess, the Web2 quote unquote kind of space, and so much capital and talent coming into NFTs. It's hard not to see NFTs just disappearing at this stage. I think they're definitely here to stay, and I guess the speed of innovation in the space will just continue to accelerate as we head into 2022. Speaking of kind of pushing the cutting edge of, I guess, what's possible with NFTs, Bored Ape, one of the biggest and most well-known NFT projects, they teamed up with Animoca Brands, which is, I guess it's a bit of an everything company these days. They're a venture firm, but they also work with a bit more, I guess they're more of an active investor. They actually work with a lot of projects and help them develop their technology and blockchain technology and games. They've got a really strong background in gaming. So they partnered up with them, Animoca Brands and Bored Apes, and they have promised to expect some sort of game by the second quarter. So at the latest, that would be June 30th next year. At the very latest, these two will be releasing a play-to-earn game, or a game with play-to-earn mechanics. So I think Bored Apes has got an NFT or a token, or I guess not a non-fungible token, but a fungible token. They have plans to release that early next year, which, in my opinion, if they do follow through with that and get the all clear from the lawyers, in my opinion, that's going to be a huge success and really just, I guess, again, accelerate innovation in the space. We've seen a lot of other projects do it already, but it doesn't really compare when a project as huge as Bored Apes does it. And then again, with Bored Apes now going to be coming out with a game, you really get the sense that things are just getting started here in terms of what's possible with NFTs. Alrighty, in terms of the crypto asset market, and we've seen continued sell-off the past 7 days overall for Bitcoin and ETH, with Bitcoin now trading at the time of recording 48,260, and it's really just had sold off heavily in the first few days of December, and then has really just kind of been finding its feet a little, and at the time of recording it's bounced off of that support line at the 200-day moving average, which will be a bit of a relief for all Bitcoin investors out there, because if it did lose that 200-day moving average, and if it did close below that, that would definitely cause a lot of nerves among the Bitcoin holders. So that's basically what everyone will be looking at this week in terms of the Bitcoin price, whether it continue to really bounce off of that 200-day moving average. And I'll quickly do ETH here, but as I said earlier in this recording, what's really going to move Bitcoin and ETH, in my opinion, in the short term, like the very short term, is going to be the result of this Fed meeting. In my opinion, that's really either going to lead to a strong rally or another sell-off. And if that doesn't cause, if I'm wrong, I would expect Bitcoin to just kind of trade range bound or sideways for a little while yet, whilst it kind of finds its feet off of this heavy sell-off it's had recently. And ETH at the moment is at 3,860. And I've lost my support lines there, but basically it is trading at a bit above the moving averages, or at least the significant moving averages compared to Bitcoin. So ETH is a bit above those, quite a bit above the 200-day moving average, as opposed to Bitcoin, which is kind of just testing it and kind of positioned a bit dangerously, uncomfortably close to that 200-day moving average. But yeah, that is it for this week. As I said, biggest thing as an investor, what I'm looking for the next week is definitely going to be dictated by what happens out of this Fed meeting. I would expect that the result of that meeting is almost a relief. I think there's a lot of fear in the market at the moment. I don't think my prediction at least is that Jerome Powell won't announce anything that's like radically, out of the blue, and that won't really spook investors. I would expect him to, maybe put some dates out there of when, or not dates, but I guess their openness to increasing interest rates. I would expect him to kind of be a bit more like open to the fact that that the Fed's considering that. And then more importantly, his language around, I guess, how quickly they're going to be tapering is going to be the biggest factor that drives markets. And again, I don't really expect him to come out and say that they're just going to radically, accelerate how quickly they taper. I expect him to kind of just stay par for the course kind of thing. And as a result of that, I would expect there to be a bounce in the markets. But that's just my opinion anyway. Medium to long term, things haven't changed in terms of my investment outlook for crypto assets. I still think layer one tokens or crypto assets that are tied to layer one blockchains, such as Avalanche with their AVAX token, the Terra's Luna token, LUNA, and then Phantom, Polkadot. I would expect them to still outperform ETH over the next couple of months, just as Ethereum continues to struggle with gas fees. However, I do expect the layer 2 Ethereum solutions to continue to gain more usage, and eventually a lot of them will release a token. That is the ones that don't have a token at the moment. So Immutable X is probably a good example of one that is really starting to get a lot of announcements and really open up its, network to everyday user. And they already had their token. So those sorts of ones I would expect to outperform ETH in the short term, as well as alternative tokens, alternative layer 1 tokens. As like those ones I mentioned. Solana would probably be another one as well, as unfortunately Ethereum is still quite expensive for the everyday person. And I think people ultimately value cheaper fees over decentralization, at least until the effects of not being overly decentralized kind of slap you in the face. But I guess that's a conversation for another day. That's my outlook at least. Thank you for tuning in. Please remember to subscribe and leave a comment. Also, it would be much appreciated if you give us a follow on Twitter. So our handle is just 7 letters with an underscore in there. So I'll spell it out. CHIFT_IO. I now recognize that that's 8 letters, but you'll be able to figure it out. It's in the description under this video anyway, and it'd be much appreciated if you give us a follow there. So until next time, thanks for tuning in and take care of yourselves.